Diversification is the simplest way to boost your investment returns while reducing risk. Here's an example. If Bitcoin goes up, the crypto market is booming. If it goes down, altcoins will likely follow. You are always exposed to the same market. If you trade other assets, you have different charts, different opportunities, and many more options to profit. These other asset classes include, for example, stocks, bonds, futures, indices, and commodities. Not putting all your money into crypto is similar to the famous phrase, "Don't put all your eggs in one basket." One of a few platforms available where you can trade different markets is the PrimeXBT trading platform. It's beneficial to use this type of platform to its fullest capabilities. How to split your capital between asset classes? There are a few things to keep in mind: your financial goal, time horizon, and your ability to tolerate risks. Remember, higher the risk, higher the reward, and vice versa. For example, if your goal is long-term, such as retirement, then you likely need to include stocks in your portfolio. And if it is short-term, like buying a laptop, then having your portfolio heavily weighted with commodities won't do. You may reevaluate and change the ratio of low-risk and high-risk investments closer to the point of reaching your goal. Share your insights into building a portfolio in the comment section below. You may also check out other videos on the subject.